morning, Theo Trade. This is Corey Rosenblum, and you're watching the Theo Nightly video for March 28th, 2019. And we're talking market money flow, specifically risk on, which is bullish and expected the future to be up and bullish, or bearish or risk off, and that suggests downside prices and a weaker economy. We can look at this from our quad market perspective. This is, in the top left, the S&P futures. All of these are on short-term hourly charts. We'll take a look at higher frames and later in the video, but I'm just comparing what's been happening recently. Gold is at the top right. We're getting a big breakdown today in gold, and crude oil flat there with the stock market. Bonds are the key market that keeps going higher and continues to grab our attention. That's in part because of the Federal Reserve has said they will not raise rates in 2019. And that surprise event, spoken right here at the last Fed meeting, set the stage for a bullish surge, short squeeze, and otherwise hedging, covering, and rapid buying of the bond market. But we'll take a look, of course, at the S&P first. On the short-term frame, we look at these two markets together. That's the S&P futures or the stock market with crude oil, which is an energy or a commodity. We need oil to power our transportation, energy, and the like. So these two are economically sensitive, which means if the economy is expanding, they're both probably going to be in uptrends. And the opposite would be bonds. If the economy is expanding, you're probably putting your money with stocks and not bonds. But the opposite is true. If you think the future is going to be bearish or downtrend or maybe even go into a recession, you'll probably take your money out of the stock market, put it over into bonds. That's, of course, big picture concepts. Gold can be its own little market, so we treat it separately, even though it is a commodity. Gold tends to trade on its own. Sometimes it's risk on, sometimes it's risk off, so it's not quite as clear as the other three markets that we are looking at. The big news today, of course, is gold gapping and trending all the way from its flag or bear breakdown from about 1320 per share, and that's going to take it under the 1300 pivot. Bonds keep going higher, and that just means yields keep going lower. But crude hasn't really pulled back with the equity market. It has stayed sideways, and that is something to gather our attention. Let's take a look at our 4-hour charts. It takes all these markets up one perspective. And on our 4-hour chart, we can see bigger picture trends. This isn't quite the daily chart, but close enough. We'll look at each of these markets individually in just a moment. But get a sense of how these markets trade together. So the markets were going up, risk on, until late October, late 2018. And that's what set in motion the top of the equity market, top of crude oil. Crude fell a lot faster, further, and more percentage decline. That actually tipped to a 20% bear market. And equity stocks, they came close, but not quite there. And that's what took us into the beginning of 2019, where we had this mega rally. Now, crude is not quite back to the halfway point. Equities are almost at their recovery high. So that's a little bit of a relative weakness in oil, but that's probably in part because of this persistent downswing that took us from 75 to 45 and back to 60. On the flip side, gold went up during the tumultuous time in equity markets at the end of 2018. And as equity markets recover, you're seeing gold go down. Bonds, as you would expect, and is exactly what happened, did surge throughout that October, November, December period. And then when the markets recovered, bonds stayed flat. When the Fed announced their policy, bonds went straight up. So you would think, one would think at least, that bonds should be down here if these money flow relationships held. They're not. Bonds are at new swing highs, new 52-week highs, and all of that. Equity markets are pushing up to those levels. So those are two things to keep watch on, along with gold in a bear flag breakdown, probably to about 1280. Let's take a look at each of these on their daily charts. Of course, our S&P is into our gravity spots. 2811 is our key inflection point today, as we watch whether or not this will push down to key pivot points or break through really 2860, 2865, 2870, and that could lead to new highs. Not expecting that yet, but neither are we expecting a breakdown until we get movement under really about 2750 or above 2870. We're stuck in the middle And that chop, chop, chop can last a little bit longer than any of us would like it to. So crude oil, next, again, that massive downtrend or that sell swing liquidation phase took crude maybe further than it should have gone. And the recovery, not quite as high as equity prices. Nevertheless, if we take out this big downtrend, crude looks a little bit like the stock market. And the analysis, the plan, the expectations, it's the same. Crude is under resistance at 60 per barrel. We expect it to go down, testing out 55, 55.50. So we'll be ready for that if that happens. And that would suggest the equity market is pulling back as well. If, of course, the alternate thesis plays out, crude could push much higher, above 60 per barrel. Gold, we'll take a look at it. Now it is having the bear flag breakdown. 1300 is its critical level, its critical pivot, and under this opens a pathway, really opened up today, down to about 1280. If gold can break under 1280, you'll then see it probably trade down toward 1250, and that's of course opportunities to purchase puts or other positions on the downside. Nevertheless, it is consolidating and chopping about this 1300 per ounce level. That's your key pivot for gold prices. And finally, we'll look at ZN. This is our 10-year note, treasury note. It's the price of it. So yield would be the opposite. Just for quick reference here, you can look at TNX for yield, and that's roughly 3.2%, 3%, 2.8%, all the way down with a break to 2019 lows to about 2.37%. So we'll be watching that closely, but we don't trade yields. If you trade this or just monitor it, it's done through ZN or ZB, and that is making new 2019 highs. So carefully watch these products, carefully watch these markets, and of course the money flow into them with respect to key levels, how bonds and stocks trade opposite each other, but that's not happening at the moment, how crude oil and equities trade with each other, and of course gold is its own little market, sometimes with equities, sometimes with bonds. Either way, for trading ETFs, GLD, USO, SPY, TLT, IEF, or the like, all this logic would play into those if you don't trade futures markets. Nevertheless, continue watching these spots, these pivots, and the money flow into and out of these markets. As always, be safe. This is Cory Rosenblum with your Theo Nightly video for March 28th, 2019.